From Centrum. Bala, thank you for joining us. Nifty futures in Singapore up 37 points. The cues are very, very mixed because you can't deny the underlying nervousness in the market. What are you going to be watching out for? Could the government have something in store which would rev up sentiment?
I don't think so because, you see, there is today talk about a stimulus package and everything. So that might actually prompt some kind of a rally in those sectors. But it would be short-lived because I don't think that stimulus would really help because the problem is one of demand. If you take housing, we've been talking about housing. Now if you go and give a loan to a real estate company, you're only encouraging it to hold on to its land bank. The idea is to bring them to their knees so that they can sell it at lower prices. That's the only way demand can be spurred. If you give them more encouragement, more reliefs, the people are not going to benefit.
Everybody's lined up for a bailout package actually. I mean the list is long, but tell me something. How much do rates need to be brought down to really spur demand? Because a lot of people are saying it has to come down to 8% if you need to see that kind of build up again.
I think it is a two-pronged approach. One is I think the rates have to come down, but I think the RBI will probably keep a watch on inflation numbers to actually come down. So that the interest rate, there is some small gap between the inflation and the interest rate, so that there is a real interest rate is positive. So I think they would watch for that. Inflation has to keep coming down. Now I think the biggest problem is, I think while everything is coming down, food price is still not coming off. Okay, how much it will impact, I don't know. Oil price still again has to come down. So once it comes down, I think interest rate will come down. Whether it is 8, 9, 6, I think that's a debate which can keep going. I don't think an industry would break because it was paying 9% instead of 7%. So I don't think that is really the issue. I think the real issue is, I think there is not enough money around. I think what will happen is two things you will see. One is the government also needs to borrow more as the combined fiscal deficit is nearing 2 digits this year. So you will have the government competing with the private sector for money. And in the private sector, the biggest rated companies, the big names, they will take away the pile. So I think that really is the issue. And if you look at the growth last 2-3 years, the biggest infusion of liquidity has also come from foreign capital. And that is shy today.
But Bala, do you think that it will solve the issue? Because on one hand, I mean, we were talking to Devin Choksi yesterday, and if I remember him correctly, he said if every bank puts aside 500 to 1,000 crores of their reserves, you have a kitty that's to the tune of about 25 to 50,000 crores. The exporters, specifically, if you break them down, the textile industry is in doldrums. I mean, if you just look at what Arvind Mills used to be and where it has been reduced to, and the entire list, capital goods and infrastructure, people have been talking about it very long. If you look at it on the flip side, the order backlog is only so strong. Forget the pipeline, and then of course real estate has a lot of inventory that they still need to clear. So is there need for a very substantial amount of bailout, or can interest rates by themselves do it? The reason I ask is, as we speak, the 10-year bond yield has actually gone to 6.72. That's probably the lowest since early 2005 as well. So the factoring of an interest rate cut needs to come, but a stimulus package, is it really that needed?
I would guess not, Rahul. I think as I'm talking about, what you need is to create demand. By giving stimulus to one or two industries, it may give them temporary relief. Like for textiles, if you were to give money, let's say, and give them tax breaks and whatever, would it improve the export story? I am not very sure. Because I think the textile export story has been slowing down from January, and it's not a very recent thing. I have been talking to friends in the trade. They have been telling the issues are far bigger. I think the competition is really in terms of price, quality, both there are issues. And the scale of operations, you have so many small bucket shops and textile units, they are not able to get the economies. He says you go to China, he says I do not know the Chinese economics, but entire Tirupur is probably 2 factories for China. So I think that is the issue. I think there are more fundamental issues to be addressed. I think a bailout will be just a money down a sink.
Sure.
Bala, let's talk about steel, because you've seen some kind of buying in metal stocks, possibly because they fell so sharply. What did you make of the Tata Steel chorus numbers, consolidated numbers? Because there have been so many worries and downgrades because of the chorus aspect of it. But it seems the profit jump is also because of the fact that chorus has got the price, ability to change price.
I think I saw the headline numbers. I don't know much about the operations of the company. I think there are two ways in which money comes. One is you have control over your raw materials, which is iron ore. And second is, after Chorus has been acquired, probably they have also done a lot of cost rationalization. So if those two things hold good, I think there will be some boost to the bottom line. And the other thing is, yes, I understand Chorus finished products are also very niche products. So probably there is some pricing power with them. So I think fairly solid in this.
And the stock is beaten down out of shape.
I don't know whether it has a single digit. I don't know whether it's fallen below 1 P. I don't know.
It's about 1.29 1 year forward at this point of time. But the other point, Mini, on the bottom line is the effective tax rate of the consolidated entity came down from about 37% to 22% as a result of the amalgamation. So 15% impact on tax rate would have helped the bottom line quite significantly, you would think?
No, probably yes, because we don't know what the overseas tax structure is. So when you consolidate the numbers, I think a lot of analysis goes into a blur.
Sure.
And maybe the international rating agencies, preempted the demand slowdown and didn't take into consideration the fact that the company is known for cost rationalization in production, and that might actually help. Auto numbers, what did you make of it? Because the numbers are getting worse by the month. If October was bad.
I think the only positive surprise was, I think, Hero Honda numbers. I think they were still in positive territory.
But that stock is at a huge premium to its peers. Does it warrant that? And how would you play this
Probably
sector?
their performance has also been matching that. So you really don't know. It's like the gentleman here was talking about Tata Steel. They're damn good numbers, but I don't know going forward will it. So you're always afraid of the light in this. I call as the light in the refrigerator syndrome. So you're always worried about it. You open the fridge and see, oh, the light is on. Oh, you close it. Then you see, I'm still worried the light is on. You open it and see. It's that kind of fear which has gripped people at this stage. So I think automobile, yes, definitely a slowdown. But at what levels, I think a lot of those things are in the price.
So is there no point looking at valuations of stocks, the fact that they're
This
dirt
is a
cheap, or you need to
between-
just wait it out, wait for some kind of interest falling off so that you can see that there is a bottom being formed and then buy?
No, I don't know. See, a bottom is being formed or has been formed. I can't say that because it's a classic conflict between valuations and growth. So valuations are very, very tempting. Growth is not visible, or if visible, people are skeptic about it, saying that it's going to go down, it's going to go down. So are the companies going to go into losses? They're going to go into Chapter 11? I don't think so. So I think this is a classic case of what you want to do, how long you have the patience. I think across sectors you see fairly strong values today in the market. I think it's after a gap of 5 or 6 years you are seeing values in this market. So I don't think opportunities keep coming, though this one might be a prolonged opportunity.
Sure. Let's get in some equity trading calls as well for the day. Shell's back.
I think it has come down to a trickle is what I would think, unless there are some more hedge fund closures and things like that, which will keep happening. But I think bulk of the selling has happened, I would guess.
But of course the markets will go up only when the buying starts, right?
Yes.
That's a different story.
And that is going to be a huge question mark, considering now I think the macros are improving, but the balance sheets are going to take a
I don't
hit.
think macros are improving.
No, you don't think so?
I think the government's fiscal is really taking a huge hit. I think we are talking about declining GDP growth, everything. Only thing, corporate India is still all right. They are not in bad shape. I think we must make a distinction. Macros are getting worse. They are the worst in the last 7-8 years I can see. And this 4 years of good performance has, I think the 1 year has taken away virtually everything.
Right, gentlemen, hold that thought. We'll head into